Hello, welcome to the Mutual Fund Show. I'm Neeraj Shah. The next 20 minutes, we'll talk about thematic funds, but a particular subset of thematic funds in particular or in detail. And that comes from the fact, or that comes on the back of Nippon India AMC starting off or doing an NFO of a thematic fund which is based on innovation. Now, uh, our guest today will talk about what is this fund all about, how applicable it is for investors, is Gurmeet Singh. But before I introduce Gurmeet Singh on the show, let me first get in or make you hear a slice of the conversation that I had earlier with Sailesh Raj Bhan of Nippon AMC. He's the CIO there. And I begin by asking him about this NFO and what kind of investors would it be most suited for. Hear him out.
The Nippon India Innovation Fund is focused on, choosing the kind of businesses which will gain market share, will possibly have the right to win in the next 10, 15 years. Why this is important is what's happened in India in the last, say, 10 years or in the last 15 years has been a significant part of that has been coming from uh, the innovation not happening in India but happening abroad. So you've got winners where companies which were global leaders in technology and all that, and now you're finding that that innovation is starting to happen because tons of private capital has gone into in the last 10, 15 years. Large companies themselves are innovating to be winning or having been ready for the change which is happening. And I think what happened in NASDAQ, say the last 20 years, has clearly been the case of a different set of businesses winning a lot more market share, a lot more market cap effectively. And we think a different set of businesses in India in the next 10, 15 years will win that. So this fund is to create portfolios which capture the changing landscape in India in terms of people doing investment in R&D, people doing investment in ahead of time, creating new business models which can disrupt the existing large leaders in the marketplace. And I think that is what this space intends to capture.
Um, it's interesting because we see large companies doing innovation, we see startups doing innovation as well. So, in some sense, you will have the whole bucket to choose from.
Interestingly, the spread will be across market caps. And given that we are looking at companies who have, in a way, established a right to win or, kind of creating an opportunity to win, I think we require companies which are investing meaningful amount of capital in R&D, or they have access to global R&D because of their parentage, or they have possibly in some markets because of their business model created duopolies which will last longer than what we can imagine. So this is the way we are looking at the kind of businesses. And like you rightly said, I think a lot of established businesses will also innovate and change their model, and we have seen that happen internationally fairly significantly in the last 10, 15 years.
Uh, yes, indeed. Your opening answer also spoke about an interesting piece wherein when you alluded to how the Nasdaq saw the kind of rise of companies which were innovators in a meaningful way. Now, I'd like to understand from you when you're launching this fund, you've thought of some pockets wherein the innovation in India is happening at a much faster and a better clip. So, can you give us a sense of where is it that you believe the ponds exist? And do you reckon that while you have access to or the opportunity to invest across market caps, that a lot of innovation is happening at the younger end of the market cap curve, or is it not so?
So interestingly, many subsegments of the market today are starting to see that, and it's visible to all of us. A lot of these new age companies which have now listed have capital, have created market shares which are fairly significant and are growing at much faster than average revenue growth in India, and also getting to profitability fairly quickly than what initially they would have thought about doing it. I think that space is very interesting. That is one space which is visible and here. A large amount of capital which has gone into this space in the unlisted side in the last 10 years, I think all of them will be available for listing. So I think it's a matter of time in the next 12, 18 months, we would have a large number of these businesses also coming for listing. There also the focus will be on businesses who have built the right to win and not businesses who are just burning cash for the sake of it. Right? The second large segment is the multinational space in India. See, India is becoming extremely relevant for global companies. And companies which are today established in India, multinational business who have seeded their business for the last 20, 30, 40, 50 years, they are now at a takeoff point because That is what is likely to happen when you set up large projects. You're doing a $5 billion project, $3 billion project, $10 billion project, right? I mean, that's the scale of government investments. Even private investments require significant areas, investment in efficiency, technology, which are not easily available in Indian companies, or at least smaller Indian companies, right? So these global competencies and capabilities are an important part we're going to play through this. And this will be visible to us because certain large projects and all, which the scale at which India is doing now is now comparable to the global project. So you'll have some of these multinationals whose business sizes today are very small, 3,000, 2,000, 5,000 crores, can be multiples of size in the next 10, 15 years. So this is one space which is interesting. The third area is all the new age, not necessarily the listed companies, but there are a lot of new age themes which are underway today. Whether it's electric vehicle, significant transition will happen. All the energy transition space, there is significant investments which will come about, right? And this will feed into the manufacturing space as well. So there is enough and more technology or differentiation possible to either increase efficiency or drive growth, or possibly deliver new kind of services which are generally not available to traditional guys who have not invested in R&D. The third space is, say, select pharma businesses which have built global capabilities, not generally in the commodity space, but more on the specialty side, are also important and interesting opportunities there. And lastly, there is a lot of companies redesigning their business model totally. For example, you have found some companies with a business model which can have 5, 10%, 15% higher growth rate than the market or the competition in the same area. And these sets of businesses generally also tend to have higher profitability because they are working in a very different way and attacking the market very differently. And some select business models like these also are there where they have some permanent or material long-term advantages which have been created. So these four segments allow us to create a portfolio in this area. And like I said, tons of businesses will also list in this area, which will be important, like, software as a service as a category, which is today not listed. So you'll have a lot of this private capital coming to public markets, given that there is no more the large amount of unlimited private capital which was there in the last few years.
Yeah, most certainly. Sailesh, a lot of government thrust of late is into pockets which will build the country, infrastructure, manufacturing, which is not necessarily innovative, save for the processes that they do, but it's a tried and tested process existing for a time. So, in some sense, would it be safe to assume that a lot of companies that will be available to you are not companies that are getting benefited from external forces as much as doing or changing the processes from within and making the whole landscape their own?
Yeah. See, that's a very interesting thing. A sustainable edge is what which is internally built, right? And we've got, even in, say, new large projects which are happening, whether it's government funded also, the right to win exists with 2, 3 players only because, very selective technologies are needed which are not there in, across the board. So those set of businesses who have a defined competitive edge will also participate in this sense. But these wouldn't be those traditional EPC businesses. These wouldn't be project-oriented businesses. These will be product and technology-oriented businesses is where the focus is. So if you look at it, today our the larger indices comprise a lot of weight from the traditional businesses, which obviously they have their own right to win, their own growth rates. But I think much higher growth rate will be found in a universe which has got greater investment in technology, greater investment in futuristic businesses, right? And that space gets left out in a typical diversified fund because it doesn't have so much participation of the index. So our attempt is to see where it can be 4, 5 years ahead of whether when these possibly, hopefully, will be having larger components and weights and indices in the next 5, 10 years. So that's the approach to it.
Got it. Would it be a concentrated strategy that you would follow? Or would it be diversified?
Yeah, so it will be diversified to the extent possible within the theme because, out of the 10 sectors which are there in indices, maybe 5 or 6 only will be having a large number of innovation or having a larger component of innovation within them. So within that sense, it will have about maybe 5, 6 sectors at most points of time. Maybe it will have between about 35 to 45 stocks or 40 to 50 stocks in terms of distribution. So I would say attempt will be reasonably diversified within the constraints. So it will not be as diversified as an equity diversified fund. And hence we are positioning it and marketing it and as a thematic product. So it does have a different risk profile than a pure diversified equity fund.
Yeah, but technically speaking, Sailesh, it would have a lower risk profile than a thematic, pure play thematic fund per se, right? Because that is very, very vertical specific here. At least you have a both the market cap flexibility, but the sectoral flexibility as well.
Yeah. So interestingly, it will not be narrow focus. It's not like a specific single vertical oriented thing. Hence, the diversification will be higher, right? But it will not be closer to the large equity diversified schemes, categories. But it is certainly a midway between pure diversified schemes and monolith sector thematic strategies.
Got it. Last couple of questions. Typically, I mean, and there are different kinds of fund managers, but I know that different schemes have different characteristics. Would the nature of investments be such that because you're seeing innovation happening in a company which might have fruit bearing capability only 12 to 18 months down the line, that there might be a period wherein the fund may go through a lull and then have a big solid Jacob effect coming into play? Or do you hope to build a fund which will have a slow, steady growth almost every year?
The reason why this is being categorized as a thematic strategy is primarily to reflect this fact that this will not be this will be a medium term, long term strategy to be participated in. And it will certainly have significant, I would say, deviations from the benchmark, the underlying benchmark, given the nature of this product is. And hence, you may have differences in performances of this versus the benchmark. The idea is, are we owning the businesses of the future? That is the attempt. And if we can have that, I'm sure equity diversified will also have. But the proportion to which we will own in this will be close to 80% of the 80% plus of the portfolio assets, because that is what is the way we are defining the innovation fund which we have. So you will have, I think, to your question, whether it will have a J curve opportunity or it will have flattening performances in the near term and all that. I think all this is possible, but the approach is very clear. Have a meaningful horizon of 5-10 years when you are taking this strategy as a part of portfolios. See this strategy as a part of thematic investments, not the basic diversified fund at the moment, at least till the category really evolves, till the innovation set of universe becomes much larger. And I think the attempt is the portfolio should be way different from what typical diversified equity funds today reflect, because their character is defined by the specific categorization which is there.
Got it. My final question, Sailesh, and you kind of identified the risks out here and put it forth, so that is kind of well covered. Just trying to think, in some sense, do you believe that the opportunity size of growth for some of the companies that you are targeting to be a part of this fund is multifold, and therefore, in that sense, you are willing to take that risk of maybe near-term underperformance as well, because these innovation companies will gain in a leapfrog in a big way if the bet turns out to be correct?
So exactly that is the approach. So the approach is clearly, innovation in India is maybe, if you look back in US and all, it's happened to a very large extent in the last 10, 15 years, right? In India, it's just beginning to happen in the last 5, 7, 10 years, because there are very few businesses who have really invested large amounts of money in R&D, right? And this space will be very exciting in the next 5, 10 years, because a lot of companies will be able to create products. See, software as a service today virtually don't have a company listed in that category, right? And share of all the new technologies in a lot of traditional businesses is still very, very small. So it's just evolving, right? So I think the opportunity is large, and it remains to be exploited and captured. And I'm sure Indian businesses and Indian entrepreneurs are there to make it happen. And even a large amount of capital has gone into private side. So I think the whole space is just evolving. And like you said, many of the large technologies today would be 100, 200, $500 million in sizes today, which is nothing from the scale India is looking to be in the next 10, 15 years. So in that framework, the opportunity is very, very meaningful.
All right. So that was Sailesh Bhan talking about the NFO and its applicability and its various facets, if you will. Now, because it's a quote unquote a thematic fund, it's important to discuss this in conjunction with what some of the other thematic funds may offer as well, existing ones, and what kind of investors would such a fund that Nippon has come out with be applicable for. To talk about that, for the first time on the Mutual Fund Show as well as on BQ Prime, we have Gurmeet Singh Sori. He's from Divitas Capital, joins us right now on the show. Gurmeet, great having you. Thanks for taking the time out.
Pleasure. Good afternoon, Neeraj. Thanks for having me.
Now, the pleasure is entirely ours. So, Gurmeet, let's begin with this NFO first, and then we'll move to thematic funds at large. Uh,
Right.
but what do you make of a fund offering like this, which is thematic in nomenclature, but from the looks of things has the optionality of investing across market caps and across multiple sectors?
Right. So basically, Neeraj, today we live in a world of innovation, right? And what this, I believe, what Nippon is trying to do through this fund is they are letting the investors participate in these, exciting new opportunities of these forward-looking businesses, right? And what is also being conveyed here is that innovation is not limited to just inventing or launching new products, right? And they're also trying to dispel this misconception that this is only consists of IT companies, startups, or small caps. What is on offering here is they basically trying to encompass the various kind of innovations, right? Be it a product innovation, business innovation, or a process innovation. To put things in perspective, for an instance, if I have to take a real world example, there's a large fintech company, uh, which basically a financial services company, which took a business which is decades and centuries old, which is a lending business, and innovated a product with new features where there was no cost EMI, there was quick dispersal leveraging technology, and there was low cost of acquisition, which basically was a hit with consumers. And as a result, they gained a huge market share, right? So it was not a new business. So this is an example that innovation can happen in an existing business, right? Another example of a business transformation or innovation could be where a company which started off with reviewing restaurants, then today is the largest food delivery, one of the largest food delivery company, right? So innovation can come in different businesses. What I believe Upon here is trying to do is they're trying to launch a fund which captures everything, right? Which captures they're going to be focusing on high growth businesses, high quality businesses, companies. So if you see the innovation today, all the disruptors, innovators, today you are having a disruption in each and every business, right? Look at the way we now look at banking. So, for example, if you see that I haven't visited my own branch in last 10 years because I can achieve everything through net banking, right? Look at the way today, the OTT platforms is changing the way we sort of, see entertainment or the way we consume entertainment, right? It is completely changed. So this fund is exclusively going to be, catering or investing into the companies which are doing some kind of innovation, right? And it is not limited only, as I've mentioned earlier, to the information technology or the startups, right?
Sure.
For example, we'll also be looking at MNCs which have a global sort of research presence, and they have a presence in India, and they could leverage sort of their global research to scale up their business in India.
Sure.
And also, companies, if you see, there's a lot of private capital which has gone into these new age businesses over the last few years, right? So at some point in time, they will be looking for a public participation,
Most certainly.
right? These businesses are trying to sort of capture those, right? Now, having said that, I must mention that, that these businesses, as you will be investing into the new businesses, so the investors who may consider investing these funds should consider a longer term horizon as compared to your normal diversified equity fund, because when you're trying to invest into the companies, future looking companies, that adoption of technology takes time, right? And for those business to actually scale and gain a meaningful market share, it takes some time, right?
Okay.
I think for that reason, the investor should have a longer term horizon when they invest into scheme like these, and this should be a part of their satellite portfolio rather than being a part of their core portfolio.
Okay, so not a part of the core portfolio, but a part of the satellite portfolio. That's part one. And viewers, I think Sailesh Bhan also referred to something like this only. One quick question, Gurmeet, and it's horses for courses, but usually people say that, let's say in a long-term fund, you do an SIP route, SIP mechanism, because you can't time the market. Here, I'm hearing you distinctly say that people should invest for the long term, because maybe a large portion of the gains could be back-ended in that, because things might take time. Would it be prudent, therefore, to either do an SIP which is short-term in nature, let's say 1-2 years, if you will, and not for perpetuity, or even from a lump sum perspective, for somebody who likes the fund, would a lump sum investment right now be advisable simply because you get it at the NAVs that you're getting when the businesses have not yet captured in all the gains that will come in at the latter half of their life cycle?
I personally always prefer the staggered route.
Okay.
I think looking at, so it's very sort of difficult to sort of predict future. What is easier to predict is present, right? So today, if you look at markets, this company is not that is only be looking at companies we're going to be listed in future. This company is going to go ahead and sort of invest the companies which are already listed and acquired, right? So today, considering today's market scenario, I personally would think that the SIP route will be a better approach to investing in this fund.
Got it. Now, it is an NFO. We have no yardstick of performance, but I would love to understand, Gurmeet. So you mentioned the positives in effect, because it's got the flexibility, it's got the longer term tenor in nature, and you should do a satellite portfolio. What are the risks to this investment? What kind of investor should avoid investing in this fund?
Well, as I said, this business will sort of be looking invest into these new age businesses, right? As I said, that when you're investing into these forward looking strategies, so adoption could be, so it could take a long period. So investors with a very long horizon should come. So people, and as I said, it could be a part of your satellite portfolio. So there could be volatility, right? Because when you're trying to gain market share and you're trying to do disruption, sometimes it takes much longer, right? And market sort of rewards sort of immediate gains, right? So from that angle, it could be you need to come with a very long horizon. There could be volatility in products like that, because this is going into new technologies, new age businesses, and also sort of those businesses who are trying to sort of disrupt existing. So you need to existing business, right? So you need to have a very long term horizon. So people who sort of cannot stomach the volatility, right, should sort of may stay away. That's where also actually I'll revert back to my earlier point. That's where SIP sort of helps you, right? So your investment is sort of going in a staggered way. So you're not putting a big lump sum upfront. So that way so when you get your sort of report 6 monthly, 1 weekly, you sort of it's all right. You haven't committed a big lump sum. You sort of stagger your investment over the years, and as these business mature and they deliver the results, you will see the gains.
Got it. Okay. Now, a final question, Gurmeet, and that is on, because this is in the basket of thematic funds, on thematic funds themselves. What's your sense? Because there are a clutch of them out there. So are some of these impressive enough for you to like them? Part one. And is there, I don't know if you can, but how does this NFO stack up versus some of the others? Are there some thematic funds that you particularly like because of the inherent characteristics, or the fund manager, or the house, or all of these put together?
Actually, we do a lot of thematic funds. I think sometimes what happens is that some of the themes which are sort of underrepresented in the index, right? So from that angle, while you may invest in a diversified equity fund, you may not be able to sort of capture the whole gain that sector may deliver, right? So for that angle, the thematic fund sort of brings in a good choice if one is sort of bullish on the theme, right? There are some specialized sectors such as healthcare, right, which offers sort of a huge sort of future potential. So today you may which are sort of underrepresented in index. So for those, in order to capture those themes, I think you may need to consider thematic funds. So I think whether that's healthcare or IT, or whether products like these innovation, which are sort of like differentiated theme and maybe underrepresented in index. So those are the themes that for one must consider a thematic fund, as long as it matches with their risk appetite and their objectives.
Got it. Thank you so much for these insights, Gurmeet. Lovely talking to you, and look forward to have you more often on the platform.
Likewise.
All right.
Thank
and
you.
Viewers, thanks for tuning into this edition of the Mutual Fund Show.